Hey guys, All in Crypto here and welcome back, ladies and gentlemen, for another YouTube video. In this video, I'm going to be putting forward the argument for why it is I believe Bitcoin is going to go over 160k in this next move that we are about to embark on. Once we've got finished with this recovery period, once we've got finished with the sell-off period, really, I should say, as we are still in that, and when we decide we want to recover, ultimately, I believe we're going to see a move now that is going to take us to around about that 160k mark. It's not going to come overnight. There's going to be a bit of staircasing involved. We're going to tell you why that is in this video. We're going to be using something called the Elliott wave theory. We're also going to be overlaying Fibonacci's on the Bitcoin chart and showing us what that tells us. And ultimately, guys, I'm going to try and normalize this sell-off as much as possible. In yesterday's video, we looked at Amazon, which back in the 1990s all the way up to the 2000s was essentially an emerging market, and we showed you the correlations between the Amazon chart, which was involved in an emerging market, and the Bitcoin chart, which is still involved in an emerging market, and why there are huge similarities in terms of the volatility and how that can bring severe sell-offs. But ultimately, if you look at the true value of something and don't just focus on the short-term price, you have nothing to worry about, essentially. And guys, we're also going to do something right now before I start the video. Let me just say, we did say on this channel we were going to get very aggressive in terms of content in periods like this, because ultimately I probably have more to talk about when we sell off than when we are doing fine and everything's going up in price. Everyone likes to talk about going to the moon and stuff like that, which is totally fine. But ultimately, it's times like these where that really separates the boys from the men's, the boys from the men, the women from the girls. And, you know, it's times like these where the YouTubers that have real staying power are going to be able to come sit in front of you and tell you exactly what's going on. And that's exactly what I'm going to try and do in this video. So if you like the sound of that, guys, get subscribed, because we have plenty more content on the way. So if we look at this most recent sell-off before we start overlaying some fibs and start drawing out some Elliott waves, you can see that, you know, it was a pretty severe one. Ultimately, guys, we have a lot of on-chain data to suggest from around about 38k all the way down to 30. That was essentially caused by liquidations. You know, we know that over 775,000 traders had their accounts liquidated, equivalent to $8.6 billion worth of crypto. Now, if you look at Bitcoin specifically, and you look at how much Bitcoin is actually illiquid and how much is liquid, that is a sizable chunk of it. And ultimately, I think that fueled a lot of this sell-off. And we've, you know, back in 2017, we didn't really have as many people getting leverage. In fact, we didn't really have a lot of leverage at all. Very, very little, if any. And ultimately, that's why we've seen a sell-off of this magnitude. And if we take away the fact that a lot of that is liquidations and just kind of draw down, it's still coming up around about a 40% sell-off. And we saw that all the way through 2017. So with that being out of the way, guys, let me tell you exactly why it is that I believe Bitcoin is going to reach $160,000 plus in this next move that it is about to make. We'll do the Fibonacci's first, and then we'll look at the Elliott wave theory. So let's quickly overlay. This is the Fibonacci retracement tool. What you do is you essentially go from your cycle top, your previous cycle top, to your previous cycle low, and this will give you a set of numbers that you can kind of work off. And the Fibonacci numbers that it uses are somewhat magical numbers. You know, you don't just see these numbers in terms of charting, in terms of this retracement. You see these numbers throughout life, theoretically. We're not going to do a deep dive into exactly what Fibonacci is, but they are somewhat accurate. Now, this isn't drawn absolutely perfectly, but it will do for what I'm trying to say in this video. You can see that these numbers actually do make a lot of sense. Certainly when you look at support areas and you look at resistance areas, you can see that these numbers do actually have some staying power. And you could have drawn this based on the previous cycles and somewhat predicted where you were going to take rests, where you were going to you know, find areas of support, resistance, find sort of sticky areas. And ultimately, guys, what I believe has just happened is we needed this sell-off to take place in order to move forwards. I'll go and draw that again as I've just deleted it. So we needed this sell-off to take place in order for us to move forwards. And I'm going to show you why that is and where the new Fibonacci that we have essentially takes us. And it takes us to around about that 160 plus range. And ultimately, I think we're going to get there. So we topped out at our 3.618 area. And we've kind of came down and found some relative support, which we've seen previously at our 1.618 area. So Fibonacci's, they are a bit of a self-fulfilling prophecy in the sense that a lot of traders use them, and they'll use these to kind of take profits and open positions, etc., etc. So they are somewhat a bit of a self-fulfilling prophecy, but they are very good. They are a helpful tool in a trader's arsenal, certainly somebody that looks at charts. I'm not really a trader, I'm a macro investor. So essentially what we've seen, and we're going to do the Elliott wave theory on top of this in a second and show you another confirming factor of why I believe in this bull run you are going to see Bitcoin at that 160k plus range. We're now going to overlay the Fibonacci retracement tool from our new cycle high to our new cycle low. We're going to go right down to the wick, and we're going to see where that takes us, ladies and gentlemen. We're going to draw a line there, then we're going to map out something called Elliott wave theory to see where that takes us. So you can see, guys, let's delete the first one to make things a little bit more clear for you. Now what we've done is we've drawn from our kind of local high all the way down to our local bottom, and we're essentially going to see where that takes us. Now remember, we topped out at that 3.618 level. We can actually go into extensions. I haven't got extensions on top of this, but that essentially right now puts us at round about 160k, guys, and ultimately I do think you are going to go significantly past that. I think it's really the end of the end of the year, the end of the kind of cycle where things really go parabolic. We saw that in the prior Bitcoin 4-year cycle theory 2017's bull run, and we saw that prior in 2013. So I actually think you're going to go significantly above 160k. Now what I want to do with you guys is I want to work out the Elliott wave theory, and we're going to do some more complex Elliott wave theory. We've talked about Elliott wave theory in a kind of simplistic terms, but what we're going to do is we're going to actually map out the Elliott waves within the Elliott waves. So Elliott wave theory essentially dictates, and it's a theory I largely subscribe to. You can see it play out a lot in charts. Essentially dictates to us that the market moves in a sort of 5-wave structure. Ralph Elliott came up with this theory, and essentially within that 5-wave structure, you have the smaller 5-wave structure play out. 5-wave structure consists of 3 impulsive waves and 2 pullback waves, and then at the end of the 5th wave, you have an ABC correction, which I believe we have just gone through, ladies and gentlemen. So without further ado, guys, let's map out those Elliott waves. Let's take this Fibonacci off for now. And then we're going to talk about, we're going to theorize how this is going to work. So this, in my opinion, guys, is wave 1. This is wave 2. You can see you have and we'll go into the smaller Elliott wave theories in a second, just so that you can see how this market is following this theory very, very closely, I believe, today anyway. Remember, guys, if it decides to do something else, then we would have alternative. Now this is our wave 3, and we are currently, let's make these a little bit neater because it's going to be a bit of a longer video. This is for you guys out there who really want to learn. Times like these where the price is going down, where the best thing you can do is learn. It's what I did back in 2018, 2019, I'm still learning to this day. Times like this is really a good time to learn. We are now in our 4th sort of Elliott wave, and we are indeed going to impulse to the 5th. We are going to start the 5th leg, in my opinion. I don't think this bull run is over. I don't see any metrics really to suggest that. People are basing the fact that this bull run is over by how severe this pullback has been. This, to me, does not look like a topping structure. And we're going to get into what this actually looks like. And we've seen this before a number of times. We saw this back in March, or certainly February, before we sold off in March. And we've actually seen this at the end of our 1 wave. We've seen it in the end of our 3 wave. And it kind of all makes sense. We're going to put it all together now. So far, we've currently gone through the 4th wave. Now, what we're going to do to kind of confirm to ourselves that we are indeed following the Elliott wave theory is we are going to look at the Elliott waves within the Elliott waves. So here, you have your 1 wave, which even if we go into smaller time frames, you have your 2 wave, you have your 3 wave, your 4 wave, then you have your 5th wave. We should probably do this in a different color, guys, just to make it clear to you. This might take me a little bit of time to map out, guys, but this is well worth watching because ultimately I do believe we are following Elliott wave theory. I do believe the Fibonacci levels are giving us a somewhat accurate price prediction on where we're likely to go. It's not exact. This isn't an exact science, guys. This is just roughly mapping everything out. And for those of you who are interested in kind of learning, and then what you have after you've completed your 1, 2, 3, 4, and 5th wave is you have an A, B, C correction, which you can see very clearly here. A, B, C correction before you then continue. So within that 1 wave, you have the 5 waves, and then within the 2 wave, you have the ABCs, Then we're going to start our third wave, which is this wave here that we are on. I hope this isn't confusing you. This is just me doing it as I'm talking. So we're following Elliott wave quite closely today. And I believe we're going to continue to follow it. So there you have your 1 and 2 wave completed. Now let's map out the third wave. So you have a 1 wave, you have a 2 wave, you have a 3 wave, you have a 4 wave, and then you have a 5th wave before you then start your A, B, C corrective wave. So you can see, guys, we very much followed the Elliott wave theory to date very, very closely. And I believe we've completed that 4th wave. I don't think we're going to go lower. Lots of people saying there's an insider saying that we're going to go to that 25k mark. I don't necessarily subscribe to that. I think there's too much ifs and buts and, you know, kind of mystery associated with that. And ultimately, I think that we sold off considerably. And like I say, I genuinely believe that a large part of that sell-off, certainly from the 38k mark, was really caused by liquidations. Which, when you take that out of things, it shows you that the pullback wasn't quite as severe as it may have been. So how are we going to work out how big this 5th wave is? Well, in traditional markets, ladies and gentlemen, so in the stock market, your 3rd wave is your biggest wave. In the commodities market, your 5th wave is your biggest wave, but typically your 5th wave will be bigger than your first wave in both of those circumstances. Now, I think that ultimately, if we look at crypto, and certainly when we look at Bitcoin, it's really in that towards the kind of end of the year where everything goes parabolic and you kind of make these, you know, huge gains. I think that's going to follow out similarly, but we're going to be conservative, guys, and we're going to take that 3rd wave and we're going to apply it to the 5th wave. And you can give or take of this. Like I say, this is not an exact science by any mean, shape or form. This is just me roughly showing you why I think we can get to around about these price levels. So if we take the percentage that our 5th wave did, our 3rd wave did, it's round about 574.3%. Now, if we apply that, guys, to our 4th wave and find out where that takes us, it's going to take us to, it will actually take us to higher than where our Fibonacci's have us. And like I said, the Fibonacci's weren't drawn perfectly. So let's draw that again properly. So if we apply that, you know, that gives us a Bitcoin price of round about $187,000, guys. And ultimately, I do think you are following this. I think within this, so your fib levels get you to round about 160,000 during the Elliott wave theory, and taking the fact that, you know, your 5th wave is likely to be a similar-ish side to your 3rd wave. It could be significantly smaller, and that would bring us to around about the fib level. And, you know, we could take the 1 wave and add it on, but ultimately I don't think you're going to be as small as the 1 wave. You know, you can see that you're getting, you know, well past that 160k mark. Ultimately, I think that's how this is going to play out. And I think within that next wave that you are about to start embarking on, let's make that white. Keep forgetting to switch back to the controller. You are going to have a series of, you know, waves within that, like we have seen today. I think that's just how it goes, guys. Before you then see your A, B, C correction, which would actually pretty perfectly coincide with the Bitcoin 4-year cycle theory that we've mapped out for you on a number of occasions, that dictates that, you know, certainly by the end of the year, you will start to sell off. So that is really all I have for you in this video. That essentially is why I believe that Bitcoin is quite likely to go to around about $160,000 plus in this next move. I think if you overlay the fibs, and we'll do it once more for you before we wrap this video up. This is more of a technical video. This is for you people that are interested in learning. And like I say, now is always the best time to learn, guys. It's times like these where, you know, you've really got that time to learn, because you're not really here for the price anymore. Now you can see that you'd be at this 4.236 level. you know, you can see how this is absolutely possible. In my opinion, this is all my opinion, this might not happen, but ultimately, guys, you know, one thing that I've learned about the crypto space is it has real resilience. It does work in these kind of boom and bust cycles. I think there are a number of things also to pay attention to. I hope this has made sense so far. I hope this hasn't been too complicated. You know, you can see that, you know, as we've kind of finished this third wave, we did see a similar structure to what we finished the one wave on. So if we take away some of these smaller Elliott waves, just to kind of show you the structure that I'm talking about, and this was it was Unaccomplished, the YouTube channel, that called this out. He's obviously been in the markets for a while and obviously does a lot of time analysing charts and called this brilliantly. Nobody can take that away from the guy. I saw him on BitBoy's live stream. Somebody sent me a clip of him basically calling out YouTubers and saying that they were part of the reason, you know, it's not healthy, and BitBoy looked like he was sweating a little bit. I don't mind BitBoy at all. I think as far as bringing people to the space and giving them, you know, basic information about crypto, he's not all that bad. But I thought that was very, very funny. I know some of you probably watched that as well or saw that clip certainly. But what I'm trying to highlight here, guys, because I always knew, you guys that have been following me for long enough know how I roll. I always get sidetracked. We'll just take these lines off altogether. Is you can see that this structure here, this Wyckoff distribution structure, essentially has already took place. You can see this structure here that we've just gone through, guys, actually took place at the end of our one wave here, which also led to a sell-off. But what you didn't have in this sell-off was as many sort of leverage long positions. Here you did, and it obviously led to more of a significant sell-off. So ultimately, ladies and gentlemen, that is all I have for you in this video. A very long way of going about things, but ultimately I don't think that this bull run is over. I believe in crypto. Bitcoin could go down to £1 and I would still be buying it. That's how strongly I believe in crypto. Certainly when you look at other projects, we talk about Cardano every day. We give you a daily Cardano update every single day. The reason we do that is because it's one of our favorite cryptos, and we believe that, you know, it is at the helm of the evolution of blockchain. It's the kind of newest blockchain. It's the kind of most up to date, if you will. Bitcoin's obviously the oldest technology, but it's still the driver of value in the space. And we did say, like I mentioned at the start of the video, it's times like these where we'll really get aggressive with our content, because we know the pain that some of you are feeling out there. You should not be betting the farm. This is still risky. This still has, the crypto space has a lot of enemies that have vested interests in perhaps taking it down. You know, certainly when you look at the idea of a peer-to-peer payment system, do you really think that governments around the world are going to allow that to happen, where you boycott them and you know, you're never going to have your own money? I genuinely don't believe that unless something drastic happens. But that is all I have for you in this video. So we mapped out the Elliott wave theory. We looked at the Fibos. The Fibos are sound Australian now. And that's all I have for you guys. And ultimately, I do genuinely think that Bitcoin is going well over $160,000 and beyond, guys. How far beyond, I don't know. I think you know, the end of the year is really a trying time. If you guys, because I did talk about it a lot, and this is where this chart is from. It's from ages ago now. Before we had even entered 2021, where we looked at this and said this is kind of how the Elliott wave, the Bitcoin 4-year cycle theory works. If you guys want more detail on the Bitcoin 4-year cycle theory, let me know. I'm happy to share any kind of content you guys want to see. Lots of people asking me about exchanges, because we know that Binance and Coinbase had a lot of issues. I will make a video covering those. I use different exchanges for different things. Like if I want to trade, I'll maybe use FTX, because I like the fact that they have that 3. You can gain a greater exposure to Ethereum. They have like a 3x Ethereum token and stuff like that. If I want to custody and stuff like that, I use different exchanges or, you know, hardware wallets or different things. So that's all I have for you in this video, guys. I hope that made sense. That is just my sort of theory on this, looking at a kind of macro scale Bitcoin. This is all my opinion. It's all my theory. It's not my theory. It's various theories that I've comprised into my own theory. And that is really all I have for you in this video, ladies and gentlemen. So I'm going to love and leave you on that note. I hope you found this helpful. I hope some of you have found this interested. If you haven't, and you want to give me reasons why, because your feedback is crucial to me and part of this channel growing, is taking on constructive criticism from you guys out there. And I do notice all your comments. Ignore the scammers in the comments pretending to be me, guys. I don't want anything from you other than your attention, and that perhaps you may learn something that could help you in your journey. All I have for you in this video, ladies and gentlemen. I'm going to love and leave you on that note, and I'll see you all in the next YouTube video. Thanks a lot for watching, guys.